Welcome back to the channel. I'm Foreman, and today I'm going to be talking about the UK stocks I'm buying right now, as well as the top falling stock in the portfolio, as I think there's quite a matter of interest. And if you like the video, please drop one of these to help beat that YouTube algorithm. According to Google Finance, the FTSE 100 is down for the week by 1.53%. This has been underperformed by the FTSE 250, which is down for the week by minus 1.91%, and the S&P 500 is down 1.57%. My portfolio, unsurprisingly, has continued to underperform the markets. My portfolio is down 2.22%, although it does make sense. I do have high allocations to stocks that have dropped. In fact, my two highest falling stocks or top diving stocks in my portfolio are actually my top holdings in the portfolio. So it does mean that I have a very high exposure to stocks that have done poorly this week, and to only be down 2.22%, I think that's quite an impressive achievement. Regardless, when we dive straight into the top faller, which is Argo Blockchain, shares are down by 7.82%. This isn't entirely through fault of the likes of Argo Blockchain, because Bitcoin had a correction during this week, and this correction we're talking about 13%. A correction is more than 10% of a dip, but less than 20%. That's, I believe, how it's defined, as a crash would be 20% or more. I don't think there was any substantial news or rumors or whatever had pushed the price of Bitcoin down. I just think it was general volatility, and I think we need to expect that when in the cryptocurrency space, and so I'm happy with it. Regardless, Argo Blockchain actually managed to drop by a lower amount than the likes of Bitcoin, which if you'd expect their future expected revenue and earnings to be on a multiple of whatever the current price of Bitcoin is and where it could be in the future, it being down now surely would impact shares a lot more. But that's fine, I'm happy with that. And this is likely because of their very, very aggressive loan that they have added to as of recently. When they first made their 6-month aggressive Bitcoin-backed loan with Galaxy, I thought this was quite ridiculous. I thought they were using a very high risk, effectively gamble of a strategy to really hopefully push up their business and do better. I think this is incredibly risky. The shorter term the duration of the loan, the more likely they've got to pay it back sooner, and the less likely it is that Bitcoin's price may change. Although it does seem to make sense. This is a company that fuels their growth by making either shareholder dilutions, selling their HODL on the balance sheet, or, for instance, taking up aggressive loans. At the moment, the interest rates are low, and so it could make sense as to why. But then if you've got a low interest rate environment and you think interest rates are going to rise in the future, surely you would have more of a longer term loan. Regardless, they've decided to take up £18.05 million more of debt, which is set to expire in 2 months' time. This left a bad taste in my mouth the initial time they had taken this debt, because they had that credit facility to do with their Texas facility plans. What happened to that? Regardless, it's good that they're going to have access to this cash, because it might mean that they're able to get the Texas facility up and running a lot quicker, but it certainly makes the investment a bit more risky. Well, I say a bit more, quite a bit more risky, because ultimately they're going to have to sell some of their HODL, and they sell some of their HODL to achieve this. It means that they really need to calculate whether the balance is truly worth it. They might have to sell a large proportion of their balance sheet of Bitcoin, and then they need to really work out, okay, if we do that and then we get some efficient miners up and running, the Texas facility up and going a lot quicker than expected, then maybe over a few year period, assuming that the Bitcoin price stays constant, then just maybe they'll be able to make more back over the longer term. But this is still speculation and more of a gamble. And now their total outstanding debt with this is £32.05 million, and this is set to expire in 2 months. That would represent a large portion of their portfolio, not even portfolio, of their HODL that they would have to sell. So this is inherently very, very risky. In fact, I believe their total HODL is hovering around about 1,600. If we think about it at Bitcoin's current prices, you're looking at selling about 1,000 Bitcoin of that HODL. This is just maths off the top of my head, so I'm likely very wrong, but that is a very huge and large amount, not hard, I don't know why I try combining the words there, but it is a huge amount to really be invested or in this debt for the next 2 months. So I'm not buying any more. Shares may have dropped, but as I say, I'm going to continue to hold my position. I'm faithful that over the next 2 to 3 years, the uplisting to the NASDAQ and their Texas facility completion should do them well, at which point I'm looking to trim back a majority of the position and then continue to hold as my exposure to the likes of Bitcoin, as diversification is protection against ignorance. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. Another top faller in the portfolio this week was the likes of Boohoo. Shares have actually managed to drop by minus 3.01%. There doesn't seem to be any substantial news on this. There was a small news article about a complaint that a customer had, but ultimately I don't think that really impacts shares by that much of a margin. What we have got is at the end of the month, September 30th, is their interim results. At that point, it may seem like they may be more negative because overall their revenue guidance was only 25% for this financial year compared to having plus 30% revenue growth in previous years. So it does make one wonder, are they truly capable of continued growth? We might see shares tick slowly upwards towards that date and they may drop on that day. Or we could see shares remain stagnant and then jump on the day of results. I don't know either way what's going to happen, so I just average into this position and continue to build it up. Boohoo is my second highest conviction stock. I recently bought some more clothing from them rather than the type of clothing I'd usually wear. I bought some more active wear type or style of clothing that I could use more on an outside sort of basis, and I'm quite happy with the purchases so far. I only had to return 1 of 4 things, and that was because they were just too big for me. I think that they're pretty much set to underpromise and overdeliver. I think 25% revenue growth guidance is very low, and I think they're going to smash this out of the park. Although, if we look about it, the first 6 months of that year is going to be a very difficult period to generate sales compared to like the Christmas period. So even now, if we see it's online with 25% or in line at 25% revenue overall, we could see that in the second half of the year they could do a lot better, and that is what I'd be very much interested to see. So naturally this week I bought 90 more shares. My total position size is something like 3,402 shares. I currently have around about £8,900 in equity, reflecting the recent dip and my acquisition, and it takes up 35% of the portfolio. I remain extremely bullish on the company. I think their sales strategy, their high pressure sales strategy, makes them a very effective business, and I think they've got a lot of long-term growth potential with the idea that they're an online e-commerce business that are able to consistently sell, and once they've done well in a certain industry, they can expand outwards, like into the beauty industry, that I'm very interested to see on how they use it with the likes of Debenhams and their products. But in order to fuel a lot of this acquisition, or at least half of this acquisition of Boohoo shares, I did in fact trim one of my other positions with one of my stocks. This stock is Ashtead Group. This is one I've spoken about. I do like the company. I think they've got long-term growth potential, but they're too big for what I like in terms of market capitalization and raw size, and that their guidance for revenue growth or just growth in general is single-digit figures. And I think at my age, I should be looking for higher growth stocks rather than trying to get that 1 to 2% dividend yield that I would have locked on at the current price I bought the shares. I also lack understanding in the likes of Ashtead Group, and so it does make sense as to why I would be trimming this back. Overall, I'm something up like 120, 130% on the investment, and I think this is a great return considering I've only really held the shares for a year and a few months. I think that's a cracking return. I'm going to trim back the profits. I'm not going to sell it all at once. I'm not going to make that mistake. I'm just going to slowly trim back, buy more shares of Boohoo where I see value, or if other stocks in my portfolio decide to drop, unlike Games Workshop that continues to keep climbing to new all-time highs, if that starts to drop, then perhaps I would sell more shares of Ashtead Group and buy back in. It does mean to do this, I did cancel my stop loss because I think ultimately if I have to use my stop loss when shares have dropped, I think it would already be too late. So I'm likely just going to continue trimming as shares go up, take more profits, invest it elsewhere, and it's sort of like my cash position in the portfolio. And we also have Team 17, which is actually the top riser for this week, going up by 1.43%. This could be an industry-wide growth. Ultimately, Team 17 hasn't had any real big news items that I am currently aware of, although I just continue to hold the shares because they have remained quite consistent and they didn't drop to a point where I was actually interested in buying more. I am bullish on the company. I do think they have long-term growth potential, and I do like how they expanded into edutainment applications for the likes of younger children, for instance, because then that is definitely a market that could start to build rapport or even customer loyalty from a young age. And then they'll be like, okay, well, I knew this from this company. Oh, they've made this game. Actually, I might be quite interested. Obviously, a 3-year-old is not going to think with logic like that, but it might be there just in the back of their head where in 10, 15 years time, they might be looking to get something as entertainment to distract themselves during the day, and Team 17 might be that solution. Although at the moment, my total deposits into the portfolio have been quite slow. I'm hopeful that over the next few months, I'm going to be able to push more money into this, because ultimately the reason why I have been investing less is because I've been spending more. It's not necessarily lifestyle inflation, although you could say that my lifestyle has certainly been inflated during this time. It's more or less the idea that the lockdowns are over, I've been going out a lot more, and now it's a case of, right, let's go back into monk mode, let's start saving money again, let's invest, and let's really build the future up. And if you're interested in my free UK stocks to buy right now, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.